Good morning from Tokyo. So I'm decided to try recording my screencast like this as often as possible, like every business days in the morning, just to practice speaking English. And I don't know what happens or nothing happens. And this morning, I'm going to talk about the ARM shares. Obviously, the ARM is one of the most valued stock in the world. It has $227 billion of market cap, and P ratio is 252, which is obviously very high. And the stock slide recently. Okay. Um, and the Reuters says, oh, okay, I can see it. Anyway, it says smart home market weakness and air chip supply concerns are the reason of the share slide. And it's actually, pretty expensive. It's too expensive, right? So this is huge drop, but this is still high, valuation, obviously. So that is, I don't think like something is, you know, like destroyed. Obviously, it is, growing rapidly. Yeah, so this is growing rapidly. $1,490 million of revenue in Q4, and expenses about half of that, non-GAAP operating expenses. And cash flow is okay, full year non-GAAP free cash flow is $882 million, yeah, which is really not that great, right? Not that huge, considering about this huge market cap. So it is expected to grow in the market. Total revenue $1,490 million. Okay, and royalty revenue was $671 million, up 11%, driven by the continued adoption of ARM technology with higher royalty rates per chip. Okay, so it is so that is this one, right? And this is not growing sequentially. It grew year on year, but not growing sequentially. And what grew is license and other revenue, right? And this is grew 29% year on year, driven by continued strong demand for ARM IP, as well as fluctuations in the timing and size of multiple high-value license agreements and contributions from backlog. Okay, and annualized contract value is okay, $819 million. This is a metric for normalized license and other revenue. This is kind of ARR thing, right? So yeah, or license revenue mostly. Okay. Okay, so this is the ACV. This is the licensing revenue. And this is the $1.6 billion. Okay. So this is the recurring part for them. Royalty revenue and license and other revenue. I actually don't understand the precise difference between these. So that is something I miss. Okay, and near-term guidance revenue is $1.260 billion. I mean the about $1.3 billion, which is which means it doesn't grow sequentially. It is about a little bit more than the last Q3, so it is moderate growth, I think. So yeah, this is Really interesting. The company has a huge moat in terms of the IP, intellectual property, but it is not growing that fast. So obviously the market expects something in the future. So in that case, as an investor, I cannot think about, consider buying the stock of ARM, but it's worth understanding, obviously, which is, why I'm taking this video. Arm's opportunity span three areas with shared growth drivers: cloud AI, edge AI, and physical AI. So obviously, tons of opportunities. Massive and growing semiconductor content, physical AI. Okay, so it has this kind of total addressable market. Yeah, ARM AI CPUs expands our opportunity in cloud AI TAM. Okay, so currently it's only $2.4 billion, but it is growing like 10 times or 20 times or even more, 40 times opportunity increase in the next 5 years. So this is why ARM is valued so high market cap. Agentic AI changes everything. Accelerators generate tokens, CPUs orchestrate, agents continuously drive the system. Right. From answers to actions. So what we can know from this is not about the, something, if I should consider buying ARM stock. Obviously not, I think, in my opinion. But we can think of, this revolution is has just started, kind of, right? So it has 40x opportunity increase in the next 5 years. That is the huge thing. And obviously, ARM can grow in that scale, and there should be some other opportunity which is undervalued at this point. So that's something I really need to think about. AI Data Center, 30 million CPU cores, AI Data Center with agentic AI. So obviously, introducing the first phase of ARM's market expansion. Okay, landing the ARM HI CPU business, $15 billion. Okay, so yeah, so this is just interesting. Royalty, revenue growth drivers, and obviously the largest shareholder of ARM, which is SoftBank Group, has is motivated to um, give this kind of a presentation because their investment company, their largest portfolio is ARM, so they are dependent of the ARM's valuation. Will be so. This is kind of position because of the position, right? So we cannot believe that naively or something. Like we should we shouldn't take this for like something granted. Strong revenue and operating profit growth yields $9. Okay, so interesting. So this may happen, but this may not happen. And if that, even if it happens, I don't think there is some, huge returns. Maybe it doubles, but not like 10 times larger. I don't know, but it can actually, but it really depends. Okay, so yeah, this is not my, not something I consider investing, but obviously a great company. So yeah, that is something I'm been thinking about, and yeah, I feel like every time I look into this kind of company, when I hear the news like the ARM stock plunged. It is like nothing, you know. It's not like some peculiar thing is happening. Why am folding stock is sinking? Yeah. That's anyway. It's just because it's expensive. That happens in the market. So we shouldn't, think about it too much because there are no investing opportunity, but we should think about the scale it is going to accomplish in the future. And there should be some other investing opportunities than this company. So that is some, kind of conclusion. I don't look into the detail anymore because um interesting. Remaining performance obligations decreased 7% year over year. Is that okay for them? I don't understand. But anyway, this is something very difficult to understand fully, but looks promising, right? So that's why many people investing in it. But I won't because I don't see the present value is discounted. So that is something I conclude about this company. Okay, see you in the next video.